1,000 next, and the Gordon Johnson mystery, because it turns out he's actually right. It's just that he hasn't figured out what's going on with the stock yet, but it will happen soon. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters as well as our subscribers. If you enjoy the show, please take time to like and subscribe. So what I wanted to review today, we also wanted to remind you this is a copyrighted show. Any use of the material presented is prohibited without written permission. We also wanted to thank our those of you who choose to like and subscribe. So Tesla finally clears 900 comfortably and stays over 900, which is totally awesome. There was kind of a mystery. We predicted that we would need about 3 days after earnings for our 3-day rule to kick in. And the 3-day rule kind of happened the next day, which I'm happy that the stock price got up, but I was very surprised that analysts were able to react that quickly and therefore be able to push the stock up nicely before the 3-day rule hit. And so the question is, what are you guys doing? You're hurting our ability to predict the stock. The answer is Standard & Poor's and Moody's upgrading Tesla because of how the balance sheet improvements have happened. One of the things that happened, as you probably know, is that Tesla paid off $1.6 billion in bonds. And that was to the Chinese. And so I had thought that, that debt was somehow being carried on the balance sheet where it didn't affect the U.S. sort of relationship with the markets, and clearly it did. So basically the reduction in the amount of debt being carried in that manner improved the credit rating of Tesla's bonds. And so with this round of that happening and us seeing an increasing margin of profit and the number of vehicles being produced, it's my belief then that sort of this new tranche is going to start getting larger. So one of the things that was brought up about this is the fact that there are a large number of funds that are restricted on the nature of debt that they can get involved with. So the higher the rating of the bonds, the more entities that can invest in that company. And so Tesla bond upgrade is helping the stock as a larger group of institutional investors are allowed to invest in the company. And I believe that this is just going to keep getting better. So kind of another way to look at it is, let's say there are all these pots of money that's allowed to invest in a company. Obviously, we have the venture fund people, we have big cap growth, we have all these different types of funds. But there are a lot of parameters that go around making sure that these are safe. And so one of the things we've been talking about is that there's a group of investors, perhaps the largest group, whose primary target is capital preservation. And that group tends to want high bonds ratings to go with the stocks that they invest in. And it's simply another category of sort of investment that's out there to be made. And as Tesla's entered that, clearly the stock price is benefiting, and quickly, because the ratings are made clear based on basically your debt to equity ratio. So you could say that just like consumers have credit ratings, and if you're pushing for that higher credit rating, you get all kinds of benefits. Number one, obviously, more people can invest when it comes to a stock in the case of Tesla, but you also get benefits that the debt you do have out there, you can refi it into lower cost debt because your rating is higher. So Tesla is getting a lot of direct and indirect benefits from this bond rating change. So my attitude towards this is congrats and way to go. So this morning, I just think that we're good to go, definitely for $950, but $1,000 in the next couple of 3 weeks is well within possibility and even above that based on this new development and these new monies coming in to drive Tesla's stock price. So the next thing we wanted to dabble in today a little bit is, well, what's going on with Gordon Johnson and still negative commentary on Tesla at every opportunity? Well, as you know, Gordon Johnson has been a poster boy for the core logic of how and why investors should not be involved. Now, I reviewed some data with one of our accounting advisors today, and he pointed a few things out to me. If you look at the numbers, it turns out that there are obviously, the biggest number I've been noting to a lot of people is the fact that, take a look at VW. VW has perhaps 50 factories around the globe producing trucks and cars. Tesla has 2. VW has 10 times the employees, and again, their factory situation is far superior to Tesla in the number of factories, but not necessarily the type of vehicles being produced. So we're now in this interesting position where Tesla's market cap, if you combine all the auto companies together, they basically are less than Tesla's current market cap, which is noteworthy. The thing about the stock market is that it's not a measurement of whether you exist or whether you have a lot of factories. It's a measurement of your growth rate. And the problem right now is that because Tesla's growing so nicely, so consistently, that's what's giving it the huge market cap, and I think this is going to keep happening. So basically, Gordon Johnson's argument is, just ask the question, how many factories does Tesla have versus how many factories does VW, GM, Mercedes, any of these companies have? And the answer is Tesla's a very small player in the auto industry right now. The problem, though, is that all those other large companies are actually shrinking in size while Tesla's growing. So if everything about the stock market were based on what are the assets you own, there's no doubt that Gordon Johnson would win this argument and should have won it handily. The problem, though, is that you have all these legacy automakers are losing market share to Tesla. And the other problem is that look at the volume. I mean, it's amazing to watch the fact now that Tesla is in a huge backlog situation on several vehicles, Cybertruck, Semi, Roadster, and now all the primary cars are showing 3 to 6 month, a year-long backlogs. So in essence, then, we have a lot of data to feed fundamental analysis of Tesla that suggests that stock price is too low and going higher because the growth rate is actually accelerating, particularly as we get these two new factories coming aboard. So my argument would be, I think we end up seeing some really bright numbers, bright updraft for the company, and I just think that Gordon Johnson is in a tough position because one of the things he has not been discussing is taking a look at the growth rate that's going on for competitors. And not only do they have a growth rate going, but the fact that they're actually shrinking. So I just think that, there's a difference of opinion here, and obviously he's being outweighed in opinion by the fact that there's a lot of people that are buying the cars, and the growth rate of Tesla is accelerating, especially with the new factories coming aboard. So I would say Gordon Johnson's a smart guy, but I think this is a situation where he needs to bail out. The other argument I would make is that he seems to stick with his argument even when Tesla's operating fundamentals keep improving. I think that's a sign that he's being paid very well to maintain the line of argument that he's presenting. And if he's getting paid, I don't see a reason for him to stop. And I'm quite amazed at the amount of airtime he gets at CNBC that could be handed to analysts that are more in line with, good quality investment analysis about where things are going. So we look forward to covering him in this further, but he's kind of right, but the growth rate problem ruins his entire analysis in my mind. So this wasn't designed to be one of our longer shows, and therefore it won't be. I wanted to just review the fact that, hey, congrats on getting over 900 and staying over 900. And now we're smelling the 1,000, particularly as larger and a more diverse pool of investors start to take Tesla seriously. So we definitely look forward to your comments on this. Reminder, we have some SpaceX shares if there's interest. We also wanted to encourage you to join us on Patreon for more information and better trading and information going forward. And then finally, we want to move on to our health tips. As you can see, I have some nature behind me. Getting out into nature would be a great idea. One new tip that we wanted to share that we've kind of covered before relative to health is the fact that I actually had a meeting with a dentist sort of offline, and he was reviewing the fact that hydrogen peroxide in perhaps a 10% solution, 10% of a glass of water, once or twice a week might not be a bad idea in terms of bad breath and something to consider as well that you might want to look up. We also have our regular health tips below. Don't forget, don't go to bed within 2 hours of eating, preferably 4 to allow the food to fully digest so it doesn't affect your health negatively. At any rate, again, congrats to everybody on the 900 for Tesla. I definitely see it pushing forward because we have our traditional 3-day rulers that need to get involved with this. So this is going to be a fun next week or two, and congratulations to you and everyone else involved. In German, we say Tschüss, au revoir, lehitrot, Hebrew, Choda Hafez, Farsi, Strasicha, Russian, Nihama, Chinese, Konbanwa, Japanese, Heido, Swedish, good day, Australia, Namaste, Hindi, Salam, our Muslim friends. And in Jamaica, we say, Enough respect, walk, good man. Thanks for joining us. Have a great day, and bye for now.